Welcome to Money Talk with Aaron Ricketts, presented by Ricketts & Associates, 3245 North Adrian Highway, Suite F. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Aaron, back with us in the studios once again. Hey, Aaron, good afternoon.
Hi, John. Good to see you.
Okay, this is January, so something just happened last month.
Yeah.
The end of the year. Also,
the quarter ended.
The end of the quarter. There you go.
That's right. A whole bunch of stuff happened last year.
Yeah.
If you listened to last week's program, you heard a big one, right? The
Right.
law that was passed about the Secure Act, the retirement changes. So, and that might come up in today's conversation a little bit, but I wanted to give you a final quarterly economic update for last year. Found a nice article that kind of recapped and talked about a bunch of numbers in here and stuff. And I kind of like to hear this stuff. And if you do too, listen up. It's kind of fun.
It's uncharted territory, isn't it? The numbers these days.
It is. Yeah. Big gains last year, right? So let's do the quarter in brief. How's that? In 15 minutes, right?
Okay.
There last year and last quarter, there was movement in the China trade negotiations, U.S.-China trade negotiations. We had what we call an accommodative Federal Reserve, right? A Federal Reserve that appeared to be really looking close at the numbers and making sure that we didn't either dip into a recession or just have a decline in our economic numbers. So that was another popular thing that might have helped stimulate and keep this economy and market going. We had evidence of decent economic growth. And, of course, that information then brought tailwinds to the fourth quarter in Wall Street, right? We had everybody's final numbers look pretty good on those statements, and they're probably all rolling in right now, and everybody's kind of cheering and excited about that. The S&P 500, the 500 large companies in this country, advanced 8.5% in the final quarter. That's pretty significant when, if we go back in the quarters of the last 20 years, I think there was 8.5% or more quarters. So that's a pretty good thrust or movement forward. Foreign stock markets also posted fourth quarter gains. And a lot of that was because there was positive stuff coming from the Brexit issue, the Great Britain exiting from the European Union, which, if you don't remember, John, they voted on that around the fall. I think it was October of 2015.
Yeah, it's been a long time.
So 5 years, almost in the making. This year it'll be 5 years, right?
It's kind of like they're at a family function. Takes a while to exit.
Wow. It's kind of taken off some of the political turmoil that we've had here because it's been rather entertaining over there. I would suggest if anybody listening hasn't, and you're interested in this, I understand, if you haven't read up on any of the Brexit issues, that you should tune in, look at some of the world news reports, and it's been quite entertaining. And, of course, I have some former family. I got family that's over there, so I stay in touch with them and hear all the stuff. And they kind of chuckle when they think that we have political issues. They're really struggling over there to find some type of middle ground. But we'll see what happens over there. But that has caused even foreign markets to post positive gains. And of course, this year, or the end of the year, a final budget was passed for this 2020, and they also included the Secure Act, which affects retirement savers and retirees. And a lot of people say that half that bill was very positive and the other half wasn't so positive. But it is what it is, and we're going to follow the law and help explain and teach clients to try to take what is there and first understand it and then use it to our advantage, right? And I'm not talking about loopholes. I'm talking about whatever the law is, we're going to follow it and get the job done for people. So talking about domestic economic health, so everything that's just going on here, we didn't have this last quarter any of the tariffs that, the president had put in place to start at a certain time. They never went into effect. We still have tariffs that were implemented that are still in effect, even that the trade deal, that first phase one deal was signed in the last couple weeks. That kind of left a lot of the tariffs in place. However, it appears that this was the most difficult part of it. And the more and more I see and hear and read about this, they wanted to get something done because this takes them to that next step. And if they don't get something done, it's going to be more difficult for them to change this because the way they work this in. So it's a good thing that they got this done. And of course, I believe that was a big part of why we saw good positive gains. Just consumer sentiment is a big part of how, not the sentiment, but the spending, which comes from positive sentiment, which we have going on and have gone on for quite some time. It's great. So that phase one deal, happy it's done. And if anything, at least it's not in the news every day and causing people concern. The Federal Reserve, talked about that a bit, has made their third interest rate cut last year, and the final one was in October. They cut every meeting that they had, and that's not common. So if most of those that are on that Federal Reserve Board are in agreement, which they are, it's usually a very positive sign that when you're cutting interest rates, the markets, the economy, the companies that make up that economy, the large companies especially, that do all the hiring, that do all the spending, that really moves our economy, it's a good positive thing for them because it's not just a short-term fix. They're looking, Federal Reserve at least, is looking at creating, when they cut the rate 3 times, they're creating an environment that is more longer and more sustaining for companies to make good quality decisions from. So I'm happy about that myself. So in terms of economic indicators, in the fall, we had an increase in hiring, and it was kind of surprising for the labor market. So that was a positive thing. We've had an incredible number of jobs that have been added over the last 10 years. In the last few years have been so positive that, we're talking 100, 150,000, 250,000 plus monthly job numbers that are, increasing. That it's been hard, and I've read a lot about this stuff, and it's pretty fascinating. It's been hard for the economists that look at this stuff really close to fathom these numbers because our growth in our the people in this country, our growth in the citizenry isn't coming from within. It's coming from our immigrants. And they say this all the time, our numbers are, if there's 2 people having 2 children, right, all we're doing is replacing them. We're just barely above that 2 people or 1 person replacing a person number right now. So we need those immigrant, that growth, and we're getting it. And that is, allowing us, to fill these jobs because, people are retiring and they're living longer. So we have fewer, of those that are, on the job rolls. People that are under 18, most of them aren't working full-time jobs. So there's this 18 to 65-year-olds that there's only so many jobs and there's only so many people to fill those jobs. So we need those, others that are coming in.
And so, the immigrants taking the jobs, is that one of the main reasons that we've had so many people go to work, so many people, employers looking for workers, and still not a tremendous upward pressure on wages.
Right. And we wish we would see a push, right, a bigger push, and that has increased. Wages have increased, but I think it's increasing at certain levels where those people are already financially stable, and our jobs that are full-time jobs, and that's mainly what this looks at is the full-timers. Those full-time jobs, we got to get manufacturing labor wages to increase. And there's these, multiple tier systems, at the auto companies and these part supplier companies that, we have people that are making $30 an hour doing the same job, standing next to somebody's making $15 an hour. And, that's been a struggle. And I think the unions are seeing that, and they're trying to make some changes with that. And it's going to be a tough go, I think, the next 5-10 years because, and we could say that maybe in the last 10 years, because of that Great Recession, we're still seeing those lagging numbers in the wages in income. So,
I mean, there's that issue. And then the other issue I see that's so incredible is to have interest rates where they've been at for such a long period of time and no inflationary pressure.
Right. And I could bring that up right now. Actually, the rates are been, and remember they used to talk about how they were artificially low. Well, they have kind of been at this level for, up and down a bit, and they kind of spiked a little bit when rates, Federal Reserve rates started going up. But the real estate 30-year conventional mortgage is at 3.7, somewhere around there, and the 15-year is right around 3.1. Same as it was 12 months ago. Now, it did spike a little bit and then it has come back down. It's mainly come back down because we had 3 interest rate revisions this year. So banks, it's cheaper for banks to do business with the Federal Reserve when they lower rates. So they pass that along to us. And I see that continuing. And I think, too, what it gives the people the ability to do is move from home to home where they're paying those closing costs and they understand that. But if they were paying 1% more, 1% more, in their mortgage, they might be able to buy a 4-bedroom house instead of a 3-bedroom house, or a 2-bedroom house instead of 1-bedroom house. And it's not changing their, monthly mortgage rate or payment. So that is very positive, even if they're only moving across the street or around the block, which we do see people do that. A couple more things. The world markets, we saw positive returns in many of the world markets. The rest of the world is still struggling, though. They have not recovered from as much as we have. We're the shining star and have been for quite some time. I think China has, figured out a way or ways to keep their growth going, but the United States is, in the last 10 years, has been the place where people want to do business from all over the world. But other world markets did well. Argentina's market was up 40-something%, but they had a huge decline the year before. Russia was up 16%, Brazil 10%, Japan 8%, and then China was up about 5%. So they were positive, but not as positive as the United States was up. The S&P 500 was up near 28%, right around that number. That's significant. But remember, in 2018, the S&P was down about 4.5%. 5 to 4.5 to 5%, so negative. So we're always wanting, like in our business, when we see all this stuff, I'm just giving out that information. I don't talk too much about this stuff in our meetings, but people do ask, what we might see in the future, the near future. My whole thing is over and over again, I say, let's do what we can in investments to protect as much on the downside. And, when you're investing in the markets, stock and bond markets, risk. It's just trying to minimize that risk or control that risk and then get as much as you can on the upside when it comes, like last year. And would you believe it? We have some investments that do that. Do what we can to protect as much on the downside and try to get as much on the upside when it comes.
So to get those investments, what's the number to call?
Call me, 265-3540.
Thanks, Aaron.
Thanks, John.
That's Money Talk with Aaron Ricketts, presented by Ricketts & Associates, 3245 North Adrian Highway, Suite L. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Join us once again next week for Money Talk here on 103.9 WLEN.